Big tech results will be a critical test for the markets this week, with Microsoft set to report after the close today. Now, this comes after disappointing results from Alphabet and Tesla really weighed on the market last week. The so-called Mag 7 stocks had been driving the markets for the last 2 years, but have been under some pressure most recently here amid the market rotation. So should investors expect more volatility ahead? Let's bring in David Smith. He's Rockland Trust's Chief Investment Officer. David, it's great to see you here. So the bar has certainly been set high for these tech companies here that are reporting over the next several days. We saw investors take issue with some of the results that we got out from Alphabet and Tesla last week. What are you expecting, or have you at all adjusted your portfolio in anticipation of this week's results?
Well, obviously, this is a really interesting time of the year. It's very, very busy. We get a lot of data this week, both on earnings and, as you pointed out in your previous segment, from the Federal Reserve. So it's a data-intensive point in the season, if you will, even though it's in the summer dog days. When we looked at what happened last week and what's happened so far this week, there's very little appetite for companies who miss earnings, and particularly on the technology side of the ledger. We saw Tesla sell off pretty aggressively after missing some key numbers in their report last week. This afternoon, we have Microsoft coming in. The expectation is for solid growth there, particularly in some of the key line items that everybody's looking at. When you think about Microsoft, it's the Azure line that everybody's going to be focused on, and what's happening with that particular business unit. So that'll happen today. We've got more reporting tomorrow with Meta. So it's going to be a busy week. A lot of information flowing at us.
You mentioned Microsoft, so I want to double click into that. Microsoft makes up nearly 20% of NVIDIA's revenue. If Microsoft's earnings come in better than anticipated, does that beget a beat from NVIDIA moving forward?
I think it's positive for NVIDIA. I mean, clearly, Microsoft has a lot of other things going on other than just AI. So it's a large business with multiple units, a lot of things driving that. But the Azure business is a big part of that for sure, and that's where the growth's really has been coming from over the last couple of years. So I think that'll be a good forecast for what you might see from NVIDIA. But as you point out, it's 20%. It's not 100%. So there are other companies that are also clients of NVIDIA that will be impactful to NVIDIA's bottom line.
Yeah, nearly 40% of NVIDIA's revenue comes from 4 companies. I think you can guess which ones. But that brings me to my next question, which is about the broader Magnificent Seven. And you say the fundamentals of the Mag 7 are not aligned. Aren't they, so long as the market remains bullish on AI spend? And isn't that why we've seen the unwinding that we have seen over the past couple of weeks here?
Well, I think the point I was trying to make is AI is important to all of the Mag 7 in different ways, right? So to paint them all with the same brush, to me, is a little bit risky. When you think of Tesla, for example, Tesla's really a technology company that's surrounded by an automobile manufacturer. And we saw what happened last week when Tesla reported. They missed some key numbers in their quarter, and the stock sold off pretty aggressively. For us, Tesla would be a really interesting company if you could break it into 2 pieces, and we could invest in what I would describe as the automobile operating system and let someone else build the cars. A la what Microsoft did back in the 90s. It's decided not to be in the computer manufacturing business, but to build the software that other people can use to run computers. And that would be a very interesting business for us. But AI's implication on Tesla is very unclear to us. Whereas with Microsoft, it's a little bit more understandable between the Azure business, which is going to benefit from AI significantly, as well as their partnership with ChatGPT's product. I think there's a couple of compelling avenues for growth from Microsoft that are very evident to us right now.
David, let's stick with the AI theme, because you were kind enough to send over 3 stock picks, and I want to bring up your first one. And it's a name that you wouldn't necessarily maybe think of or would be maybe at the top of investor shopping lists when it comes to an AI play. You actually like Accenture. Walk us through your investment thesis and why you're seeing so much opportunity there.
Yeah, when we think back to the internet phenomenon back in the early 90s, it's the picks and shovels kind of idea. These guys are now, the companies that we're talking about today, companies like NVIDIA and Microsoft, are kind of manufacturing the tools that people are going to use. Ultimately, these tools need to be deployed in enterprises for them to be beneficial to the greater economy and to corporate America. In corporate America, IT executives are learning about AI. It's a new field, and it's changing very rapidly. There are many, many new vendors. And learning how to deploy AI technology in the operation, for example, of a financial institution is going to require some guidance, some people who have seen other people do it, seen other people make mistakes, and help you as a client avoid making those same mistakes that others have made. So we think a company like Accenture is very well positioned to help corporate America guide their way through what is going to be a very interesting and exciting, but also complicated time. If you think about just the very basics of all the new vendors that are out in the marketplace that are providing solutions into AI at the moment, and they'll likely change an awful lot as we go forward. I think having somebody who can sit by your side and help you decision how to move forward is going to be really, really important for corporate America and IT executives in particular.
David, you got two other picks for us that really sort of rely on the idea of the market getting comfortable with looking at things outside of AI. Talk to me specifically about EOG and why that's a top pick for you.
Yeah, I think if the market can get comfortable that a soft landing is actually going to come to fruition, and I think that's happening, and I think that's why we've seen the broadening out really since the July peak. I think that one of the areas that people will begin to get comfortable with is in the energy space, particularly companies that are exposed to the oil patch. EOG is one that we think is best of breed in that space. I mean, the price of oil has been relatively unvolatile, which is unusual for oil. And it's been kind of in that mid 70s range up to 80s. It kind of bounces around a little bit in a pretty tight range for oil. And I think people have overlooked the stability of the price of the commodity. And these companies have gotten disciplined. And it wasn't that long ago when drilling just for drilling's sake was the MO of these entities. But they've changed that now. They've become much more disciplined. They're focused on cash flow and return on invested capital. And we think the market really hasn't been focused on that because they've been so focused on what's going on in AI. So if we get an economic soft landing and corporate America, the rest of the world's doing well, there is, in our opinion, lots of opportunities for people to revalue these companies, and there's multiple expansion opportunities here. The other thing that makes us constructive on it is I think that there is a bias to the upside on commodities. If you think about all the challenges that we have in the Middle East and in Russia, there's more likelihood, I think, that the commodity price goes higher as opposed to lower, particularly with the backdrop of a stronger economic environment.
All right, David Smith, we have to leave it there. Thanks so much for hopping on here with us this morning. Rockland Trust Chief Investment Officer. Thanks, David.
Thank you for having me.